Hello everyone, welcome. Momentum, the theme today is about momentum indicators, how you can trade using momentum. Topic pretty much for beginners and a little bit of intermediate, but yeah. So today we're gonna have a look. Let me just, go to the handout section. Yeah. PDF is on, by the way, guys. I would like to remind you that this session is being recorded as usual. So don't worry if you cannot stay until the very end. You can receive the recording in you will actually definitely receive the recording in your emails. If you haven't received it, check your spams, please. Sometimes it's in the spam section. PDF is on the handout section. You can download. It's already on. And yeah, let's do it. Okay. Disclaimer: this material provides general marketing communication for information purpose only and does not constitute independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leverage product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved. Take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. You can find the full risk disclosure in our website along with all the legal documentation that you might want to check. Everything is online. If you cannot find them, please ask for them. So, folks, I would like really, as usual, to make sure that you can hear me loud and clear. So a quick yes would be brilliant. This is our email address, webinars@ageofm.com. You can ask anything you want. I'm here to help anyway. Okay. So here's me. Let's skip myself. Thank you for confirming, Christopher. Thank you very much. Perfect. So we're good to go. Okay, momentum. First of all, let's take it step by step. What we mean by saying momentum. Momentum is, it represents strength. Okay, momentum in physics, okay, in mechanics, it represents velocity. It represents the mass. Okay, so in Newtonian mechanics, is the product of the mass and velocity of an object. So just in a simple way, how can I explain momentum? Is thinking it as the strength that a downtrend has, the strength that an uptrend has, and so on and so forth. So the strength, the more the strength, the longer the trend could last, right? So think it this way. This is the simplest possible way to understand momentum. So today we're gonna When I help you understand what is momentum, see some principle if you are thinking of trying trying trading using momentum as your main principle. But I see some momentum indicators as well with different time frames, different setups, and etc. I mean, okay, obviously momentum. The indicators that represent momentum are very, very famous. So you might already using them, or at least you know them already, because momentum indicators are MACD, RSI, Stochastic, CCI. So the 3 out of 4 are very, very famous. So you might already got yourself familiar with this. So yeah, these are considered as momentum indicators. So a bit of a definitions, a bit of a explanation. As I said, the simplest way to understand momentum is thinking that momentum is a kind of a strength, or if you prefer, speed. So momentum, think that just the definition of it, okay, we stick to the definition. Momentum is the rate of acceleration of an asset's price or volume. So what that means? It means that momentum is the speed at which the price is changing. Earlier I said that in Newtonian mechanics, momentum is the product of the mass and velocity. So it's something similar. Momentum in forex industry is the speed at which the momentum is changing. So the faster the speed, the more the speed, the higher the speed, the more the trend will last, right? So if you're in a car, if you're driving a car and you're, I don't know, 100 kilometers an hour, you cannot stop in a second, or you cannot stop on spot. You need to slow down, slow down, slow down, slow down until you manage to stop. The same thing stands with momentum. If the momentum is too high and our asset is in an existing trend, until that trend run out of steam, it will take a bit of time. You cannot like literally change in a matter of a flip of an eye, right? So simply put, it refers to the rate of change on price movement for a particular asset, and it is usually defined as a rate. So that's why technical analysis comes into play and is very, very important, because the only way to measure momentum is by using oscillators. Okay, oscillators will help us to identify momentum and also to help us to identify trend, the direction as well. It would be very, very useful if we combine these oscillators with trend lines as well. It will give you further confirmation. So, in the very next slide, here, you can see the formula. That's our RSI. Before we go to the RSI, just very, very quickly to say that momentum, the way to calculate momentum is by comparing the price change of an asset and versus the volume. So for a particular period of time, obviously. So in other words, high trading volume increases the market momentum of a price change, and vice versa. Low trading volume decreases the momentum. So they are very correlated. They are positively correlated, to be more precise. So momentum, so I'm saying over here, principles of momentum and how the momentum indicators can help. There are a lot of investors, you know, there are many different kind of traders, investors, etc. And we have swing traders, we have scalpers, we have many different types of approach. So one type of trading approach, of trading technique, is momentum. So there are people that they use momentum as their sole trading technique, because once a momentum trader sees acceleration in a stock's price or earnings or revenue, and etc., the trader will often take a long or a short position in the stock in the hope that its momentum will continue in either an upwards or downwards direction. By the way, we are currently we are in the middle of earnings season, right? So there are a lot of people monitoring the earnings releases and checking for the companies that they are mostly interested in, checking their revenues, whether they beat or miss earnings, whether the earning per share has increased or decreased, etc., in order to identify their potential position. And this is what the momentum traders in the stock market are actually doing. They are monitoring the stock price, the earning release and revenue before they take any long-term position in their stock. So this strategy relies on could rely on either long-term position, but also short-term movements as well. So so it's a combination of fundamentals with technicals. If, however, yeah, so in the short term though, so if you're a person that checks the earnings and considers to take a short-term position, so short-term I'm referring to intraday approach. So for example, today we're gonna see Tesla reporting after the market close. So if you're a person that you don't want to take any long-term positions or medium-term positions, you just want to trade the short-term movements, you might ignore the fundamentals a bit and solely focus on the momentum. However, even as a short-term trader, it's good to have at the back of your mind what is expected on, let's say, Tesla's tonight earning release, because in order to set your stop loss at an appropriate level and not to risk the stop loss to be attached to the huge volatility during the release of the earnings and etc. So so if you would like to apply momentum, you can either consider buying or selling an instrument based on the strength of its trend. If you want to use a momentum-based strategy, you can take a long position in an asset that is already being trending up. If your asset is trending down, you could consider taking a short position. So instead of the traditional philosophy of trading, like buying low or sell high, momentum trading or momentum investing seeks to sell low and buy lower, or buy high and sell higher. That's the approach. So instead of identifying the continuation or reversal patterns, momentum traders focus on the trend created by the most recent price break. Think of it like the momentum of a train. When a train starts, it accelerating. It accelerates, but moves slowly, right? At the beginning, it starts and it's accelerating slowly until it peaks. So in the middle of the strip, it stops accelerating, but travels at a higher velocity. At the end of the trip, the train decelerates as it slows down. So for the momentum traders or investors, the best part of the train ride is the middle, when the train is moving at its highest velocity. Are you okay so far, guys? If you don't understand something, just interrupt me, okay? So our very first and one of the, actually the number one for me in regards to the population, how popular it is RSI, Relative Strength Index. Momentum oscillator, as the name suggests, measures the strength, so measures the momentum for a particular price period and a particular price movement. So what does it aims? This indicator aims to show the likelihood of whether the current trend is strong in comparison with the previous performance. Okay, I have the formula on. You don't need to be aware of it. It's good to understand it, but you don't need to be aware because you can find RSI in your platform for free. Just apply it and stick it on your charts, and the only thing that you need to worry about is trying to read it properly to understand what it shows. So, RSI was one of the indicators, the main indicators that Mr. Wilder discovered and developed. Wilder is the developer of ATR, so average range, ADX, average directional index, and the parabolic SAR. So, and it's one of the oldest, if I'm not mistaken, technical indicators. So, why is important and why is so popular? Simply because by monitoring and trying to understand RSI, it will help you identify a trend, the direction of the trend, and whether the direction is changing, so whether we have a reversal, and also the momentum. So also you can identify the strength of the trend. So in a single indicator, you are getting all these informations. By default, the period that the RSI is using is 14 period. So if you apply it on the 1 hour chart, is taking into consideration the previous 14 hours. If you apply it in the daily chart, it takes into consideration the previous 14 hours and so on and so forth. So let's move on. So this is a daily chart. So pretty much what it does is identifying the average daily change. Average daily change for those days when the market rose, divided by the average day change for those days when the market fell. So over here, for example, just actually wait a minute. Have in mind that. Let me just skip this slide for a second and go to the other one. So look at this over here, my explanation about RSI. RSI is it can be as low as 0 and as high as 100, so it has a range. Anything above 70 is considered as an overbought territory. Anything below 20 is considered as an oversold territory. and the middle one, the neutral zone, is at 50. Okay, so see, because it's an indicator, it's an oscillator that help us to identify direction, strength of the trend, reversal, etc. It's varied, it's in a range. So what is key about it is what we need to observe when we are using RSI is where is it moving? Is it moving above 70? Is it moving above 50? Is it moving below 50, below 20, etc. Also, where is it pointing? So where is it pointing to the upside? Is it pointing to the downside? And also how sharp the slope is. Is it sharp enough? Is it very neutral? It might be flattened. It might be, so also the angle, how steep the slope is matters. Okay. Yeah. So you can understand that any value above 70, okay, might then confirm an overbought condition. So that means that we might see the asset reversing because it's overbought, it's in an extreme condition. If the asset is below 20 and is keep pointing further to the downside, at some point we're gonna see it steady, then it would be a notification, it would be an alert that, you know what, it's oversold, so it needs a bit of a correction, it needs a bit of a bounce, a bit of a corrective pullback, and etc. So that's where you should focus on. So let me take a step backwards and see our example over here. Okay, so I'm seeing over here that when average gain is more than the average loss, then RSI will rise. And if the average gain is less than the average loss, the RSI will fall. So what we mean by that is simply is pretty much when we see the RSI falling or rising. Okay, so for example over here, okay, ignore the rest of the indicators. Let's focus only on the RSI. We could see our candles consolidating for 1, 2, 3, 6, 7, 8, 9, 10, 11, 12, 13, 14, 16, okay, 16, 17 days in a row. Why am I saying that? Because if you focus a bit, you're gonna see that we're like, since this boost over here, we're like stuck in a range. You see that stuck in this range. But our RSI during this time, it was like retesting again the 50 zone. It's a shame that I don't have a line on, but you can see it's a bit flattened. It's not pointing up like here. It's not pointing down like here, etc. It's a bit choppy. It's a bit sideways. So that was an indication that the asset might enter a ranging market, a consolidation mode. So, oops, sorry. So that candle over here, a strong bearish candle over here, which broke our low, and in which we have seen the RSI started falling, it was an indication in regards to an increasing negative momentum. So increasing negative momentum suggests that the sellers are gaining control. So so that was the one thing. So, so you can understand that it's not solely about identifying what the RSI is presenting, but also to combine it with either with price action analysis or other indicators such as volume, like here, or parabolic SAR, etc. So the fact over here that we have the breakdown of this of the lower line of the channel, along with the breakdown of our 20-period moving average from the Bollinger Bands, the parabolic SARs, and the decline below 50 of the RSI was a good indication that we can enter short. So now in regards to the target, that's solely up to your approach, to your risk and reward ratio, or your exit strategy. So over here, the example in this example, we have used as exit strategies, as target levels, the Fibonacci levels, the Fibonacci levels, as I was saying, along with a risk and reward ratio. So the 23.6 was the very first target, and the second target, it was double the distance from the entry. So what I mean, by measuring the entry from the stop loss, right? It was double of, so we use this distance of the stop loss, and we double it, and we found the second target. But it doesn't matter. The exit strategy that you will use is up to you, up to what you are usually do. So let's see another example just to make you understand how it works. So over here, okay, it's a daily chart again. It doesn't matter, just to show you how you can read the signals that the RSI is presenting. So here we have a dollar cat. For a long time, RSI was steady above 50. It retested 50 sometimes, but it never crossed below it since October 17th and up to 3rd of January. So that was a very nice indication that there is an uptrend, and it's a really strong one, and will last for many months, weeks, etc. So the fact that it never crossed 50, it was a good indication for people to enter and to enter long. So remember, trend is our friend. But some point in January, it crossed below 50. So that was the very first indication, not here, not here, but mainly on the next candle. I don't know why I put my line there. That was an indication that the downtrend has stopped, and we have a new trend, a downtrend developing. Why? Because RSI turned below 50. You can say, but Andrea, it wasn't the RSI only that turned negative, that turned below 50. It was also we had actually big negative candles, and you're right. That was the very first indication, because we had 1, 2, 3 consecutive candles. Okay, we knew that something is wrong. Something is it running out of steam? Is it turning down already? Is this a correction? What is this? But the confirmation came with RSI, because that was a clear signal that is not a correction, is actually a new trend, that there's no longer an uptrend, but instead we might see the asset turning down and developing a downwards channel. And this is what indeed happened. After this sharp decline, we started getting lower highs. Okay, so it was like a downwards channel started to being developed, and you can see that because it struggled to move up again above 50. So in this case, if you missed this sharp decline, you have missed it, you haven't checked the chart on time, and etc. You can still use and take and participate in this new trend every time that you're seeing a reversal on the RSI. So for example, so 1, 2, 3 sessions, our dollar cut over here steady, and we can see that over here it failed, it rejected the 30 level, sorry, and started slowly to move above it and to point to the 50 territory. So that is a chance for you to take a long position for a limited period of time. Or over here was consolidating and testing again the 50 zone until it provided a sharp slope lower. So that was an indication that you can enter short, sorry. Big bearish candle, sharp slope of RSI. So a short position for few days or even weeks. So let's move on. I have plenty of examples, but okay. Something last for RSI is that okay, by the default settings are the default setting is 14 periods. However, that should change based on which time frame you want to apply it. If you are a scalper and you are using it on a 15 minutes chart, 7 minutes chart, an hourly chart, you need to play a bit with it. You need to test it. So try 7, try 5, try 10, and stick to the setting that actually satisfies your asset. Okay? The 14 period one might be okay for your asset for, let's say, 30 minutes chart. If it's okay and it gives you accurate signals, that's fair enough. But if not, try to amend it until you find the settings that is appropriate for your asset and for your time zone. If there is, for any reason, a lot of volatility in the market and we see a large price movement, sudden price movement, RSI, like every single other indicator, they might give a false signal, but that's because of the sudden volatility. If you combine it with other indicators, it would be just fine. Be careful though. Be careful with the settings, as I said. Don't try to overdo it. Try to test a few of them and stick to the one that makes sense to you. But don't try to take it too low in order to get fast signals, because fast signals could be also not so accurate. So stick to the settings that actually give you accurate, as much possible actually accurate signals. Because there are people that they might use daily charts, but they set their RSI at 5 or even 3 because they want to have fast signals. But fast signals sometimes might be false ones. So take it a bit easy. Others trying to be super safe, they increase a lot the settings. That might also provide some not so accurate and reliable signals. So try to play with it, with the settings, and identify the ones that gives you the best possible outcome. RSI is an indicator that it needs to be combined with something else. It is very often used in conjunction with trend lines or MACD or Bollingers. Okay, so but trend lines mainly because it helps us to identify also support and resistance levels. Okay, so let's move on. Just one more thing. If you have identified your appropriate setting, stick with it. Don't change it, okay? Yeah. Next one, stochastic. very similar with RSI, but contains two lines, a fast one and a slow one, barriered again, but this time between, again with 0 and 100, but the overbought and the oversold territories are a bit different. The oversold territory is below 20, the overbought one is below 8, is above 80, not 70. So a bit different in regards to the where the overbought territory is and the oversold territory. So developed by Mr. Lane back during 1950s, is a momentum indicator again. And in this indicator, we have two lines, as I said, the fast average and the slow average. So what matters over here, other than the slow, other whether they are in the overbought territory or the oversold territory, or how sharp their slope is, something that also matters is the crossover of the two lines. Because if the fast is above the slow, that is a bullish signal. If the fast is below the slow, that's a bearish signal, a selling signal. So we have an extra information if we use stochastic, okay? Something extra. So we get again the momentum, we get the direction, we get the oversold or overbought condition, but we are getting also entry points by considering these crossovers. And where these crossovers happen, right? Because it matters if our bullish crossover it was on the oversold territory, because this is a very strong signal that we can enter, that the asset needs to, it's a rebound, a bounce, sorry, a corrective bounce. So that's a long position. A bearish crossover within the overbought territory or below the overbought territory. Actually, if it's below the overbought territory, it's even more important, because that's an indication that it has reached to its overbought territory and it wants a corrective pullback or a complete reversal. Okay. So we have seen from what is composed, we have seen the zones, we have said that it helps us to identify the trend reversal, identification of overbought or oversold conditions, and entry or exit rates. Okay, so I will explain right now what I mean. Here we have an example. Okay, here is the, what is the silver against dollar, as against euro, sorry. So that's daily again, but it doesn't matter, guys. It's just, it was easier for me to find the good examples, that's why. So, okay, it was in an uptrend, right? So it was in the overbought territory, but it was steady. So that means that we're gonna have more and more and more upwards movement. That's fine. But suddenly over here, it short very sharply, right? Can you see how sharp the slope of the stochastic is, along with the bearish cross as well? So that is coming into combination with this big fall over here. Okay, so it confirmed this turn down, I think over here. So that was an entry point, because we've already had 1, 2, 3, nearly 4 days in a row downwards, a very steep, sharp downwards slope in stochastic. So that was an indication that decline could last for a few more days, and indeed this was the case. Afterwards, we see 1, 2, 3, 4 days in a row, too steady. So what happened in stochastic over here? It indeed steady below its 20, within its oversold territory. It's steady until it slowly started to point higher. But we weren't really sure whether this is a corrective bounce or a reversal of the trend. The confirmation came as soon as it crossed above 20 and we get this steep slope over here. So that was the indication that we could enter long. Why? Steeper slope above 20, pointing upwards, along with a breakout. Oops, let me clear a bit this mess. Along with, so take it a bit. Can you see that? Steeper, sharpest slope pointing up in combination with, just try to do this, okay, I cannot do a straight line, but why put this line on? Because it was our immediate resistance, and the immediate resistance broke over here. So this, or even this candle was a confirmation that we need to enter long. So these or these could be used as our entries, right? Because we have a lot of information. First of all, we have this steep stochastic pointing higher after they exited their oversold territory. We have the breakout of the immediate resistance. We have the breakout above 50 and 20 moving average and 200 moving average. So there was a lot of, there was confirmation that this is a long position could be taken. Okay. Also, what else? Obviously, if you missed that, there was another entry point. So another entry point, it could have been this one. Well, when the slope is still positive and it's crossing 80, you can say, but Andrea, it might be too late. No, it wasn't, because if it just break 80, means that there is further steam to the upside. There are few, there's still momentum. The exit can be taken as soon as stochastic turns below 80. So that could be a nice exit level, or even that one. Okay. Okay. Obviously, you need to combine it with your price action. So these two negative candles in combination with the fall below 80 was a nice exit level. Or these strong candles, right? And this decline, this bearish cross of stochastic, be another indication of an exit level. Or simply, if it has hit your targets, that's it. So there are a lot of exit routes. That's totally up to your exit strategy. Okay, another example. As I said, if so, the fast line over here is the right one. Sorry, the fast line over here is the white one. The slow one is the red one. Okay, so sorry, I ran out of steam. So this is everything that we have discussed. If the signal line, so the white one, is above 80 and below the slow one, that's a down move possibility, because it's overbought. If the signal line is below 20 and above slow moving average, there is a possibility of up move since oversold. Okay, so yeah, that's pretty much it. Let's move on. No questions? Any? No. Okay, so my slides. So as I was saying, let's move on to, okay, that's a bit of a recap on stochastics. You can find entry level, you can find exit level, you can find identify possible reversals, and it gives you a bit of a faster signals than RSI. If you try to change the settings and you try to expand oversold or overbought zone, and what I mean by that, give me a second to demonstrate. So if you try to change the settings, here's my stochastic, okay, here at the very bottom. If you try to expand the overbought, the oversold territories, that might not be a good idea because it might give you fast signals but inaccurate ones. So if you increase the oversold to 30 and I don't know, the overbought to 90, oh sorry, to 70, it might give you early signals but not so accurate ones. Okay, so take care of it. Okay, if you are considering to change the overbought and oversold zones. Again, you can change settings. Okay, you can change if you want the let me reset it. Okay, you can change the settings, the time frames, the values over here. The default one is 1477. I have detected to 533 because I'm using it into 1 hour or 30 minutes charts. Okay, that's the reason why I changed my stochastic, because I'm using it for intraday analysis. But if you're using it for daily, 4 hour, or even weekly, you can keep the default ones. Okay, so it's a very powerful tool. Okay, you can also identify diversions with it. Yeah, so MACD is something that we have covered very, very, very recently, I think 2 weeks ago. So I'm not gonna go through, I'm not gonna do it like in depth. I will just go straight, I will just say that it's a trending indicator, but momentum oscillator as well. So it turns into 2 trend following indicators: moving average, which is with the red line, and oscillator with these histograms that present the momentum. Okay, so the red line, which is the signal line, is the moving average line. You can identify the trends, the turns. With the histogram, you can identify the momentum, and any crosses of signal line with the histogram, it could be used as confirmation and or even entry signals or exit signals. Okay, so let's go to an example. So there are plenty of information that you can get from MACD. You can get reversals, momentum, direction, crossover, divergence, dramatic rises, right? Or even whether the asset is consolidating or not. So let's have a look on an example before we analyzed the actually, let's go through what each of these, how you can read MACD. So have in mind that if your MACD is both lines, so the red and the histogram, they have steady into 0, they are like, let me show you something. So let me show you an example. Try to find one. I have one. Okay, can you see that? Over here, so over here, we can see that in oil, in the Brent, MACD is nearly ready to touch zero. In some cases, you might see even something even more interesting, such as, let me see whether I can find an example like that. But, okay, here it is. Can you see this, guys? So completely at zero, like consolidating around zero. That's a confirmation that your asset has entered consolidation mode. Okay, so that's a sign that you might wait a bit until you clarify the direction of the asset, or it might be an alert that if you are in an existing position, you might consider exiting. Okay, so if the asset is in the neutral line and consolidating around it without providing a direction, that means consolidation. If, however, our lines, our MACD lines are above zero, okay, are above zero with the histogram lines above the signal line, like over here, that's a very bullish signal, a buying signal. So let's do first the buying signal. Okay, so if histogram above signal and both above zero pointing further to the upside, that's bullish. Okay. If, however, in which other case we also have bullish signal, if we both are below zero, but the histogram turned above the signal line, and the signal line from downwards started pointing higher. So this is also a bullish signal, okay? Because it suggests that we have a corrective bounce. Over here in numbers over here, we realized, we confirmed that it wasn't just a corrective bounce, but it was a new uptrend. Okay, both are bullish signals. Now, bearish signals. Bearish signals is when you will either see both lines extending southwards, so both histogram and signal line are below zero and they keep extending lower, or if you see, if you're both of them are above zero, but they started pointing downwards with the histogram turning below signal line. So that was the very first indication, but as soon as they both started sloping lower, that was a sell signal, okay? So even if you miss that, the time that they cross below zero was an indication that you can still have the chance, you still have the chance to enter, because there is still further steam to the downside, okay? Easy busy? Am I talking alone over here, guys? Where are you? Okay, so I mean, it's a very, very famous indicator. Obviously, can be combined with Bollingers. You can read your candles as well. They will help you very, very much. You can see whether your MACD agrees with a breakout of moving average or Bollingers or break of fractals, etc. You can take it in combination if you're not sure about something. And last but not least, CCI. Another indicator that presents momentum. So the difference is that CCI, Commodity Channel Index, measures the difference between the current price and the historical average prices, like RSI. But let me show you how it looks like. Okay, initially it was named like that because initially its creator used it for commodities. But afterwards, we figure out that it can be used in everywhere, as long as we try to adjust the settings on our asset. So over here I have UK oil 4-hour chart. Let's see whether it gives me some nice accurate signals. Let me see. Oops. Let's see. So over here we had a bottom. So if by default it's 14, okay? We reached the bottom over here, but oh, that's a bit ahead of time, it seems. That's a bit ahead of time. No, it doesn't satisfy very well my my UK oil 4 hours. Let's see whether now it's better. So sorry, I should tap it, not. So it's 14. Let's make it 20. Let's see whether it smooths out. Okay, it's still below 100. So cross up. Yeah, that's much better. So, so this CCI is like MACD. It has a zero line. Okay, so it's crossing above or below the zero line. Okay, so any reading above 100, so 100 and above, indicates that the price is well above the historical average. So we have a strong upwards trend. Anything below zero indicates that the price is below the historical average and the trend has been strong to the downside. A cross from negative to positive, it could be used as a signal to watch for an emerging uptrend. A cross from positive to negative may indicate an emerging downtrend. So let's see. Over here, it turned down. So I will put the zero line on because it's easier to get appropriate. Oops. Zero. Perfect. So over here, we had seen, oh, sorry, here is, oh, no, it wasn't here, it's later. Okay, I cannot put it precisely, but okay. So what we have, so over here, it started slow. Okay, actually, it started sloping earlier, and over here it crossed below zero and very sharp, the very sharp slope pointing lower. So it keeps it was keep sloping and sloping and sloping below zero. It crossed over here the 100 level, which is what matters a lot. So 0 and 100 levels is what you should really focus on. Okay, so over here, had to update my MT4, sorry, now I'm struggling to find everything that I need. Looks, okay, here it closed below, it crossed below minus 100, suggesting that we have a strong downtrend. So indeed, it was the case. We had a small of a bounce, but it extended even lower until it bottomed over here, the $98 level. Okay, so we were seeing it down, down, down until it bottomed, started to rise a bit, but that was again below 100, below minus 100. So there wasn't a strong indication that it's about to change. The indication that the trend has started to change a bit, it came once we saw the asset crossing above minus 100 and pointing up. So that could be a short-term long entry, okay, with exit at, oops, here, or here, okay, when it crossed 100 or when it started slowing down below 100. So that could be our exit levels or our entry levels for a short position again, because it fell below 100, right? It started pointing downwards, it steady a bit. Okay, so look at that. If you weren't sure, you could see your candle. So what's going on? What we have a cross, okay, but I'm not sure. So let's wait a bit. The next candle, it was bullish and it was above 20-day moving average or 20 period moving average. So no, I'm not gonna take a sell position yet. The next one was again bullish, so it was like, ooh, what am I doing? Is it sideways? Is it gonna resume the uptrend? What was going on? So let's wait. Bullish, doji, down, down, and until it broke the 20-day moving average. So let's see. It breaks it, and I have a sharp fall as well below zero towards minus 100. That could be a nice short entry because it's well below zero and actually past the 100 minus. Okay, so okay, that's so you need to always combine CCI with something else. So guys, that was the end of our webinar. I'm on time for a change, 1 hour sharp, so that's perfect. Unfortunately, I didn't have a lot of interaction, so I don't know whether it is because you get bored or because you don't have any questions and you feel complete or something. So let me know. If that's the case. Yeah. So thank you very much for attending. We are done. I can see that no questions are coming. Thank you, Patrick. Thank you for the thumbs up. So if you have anything you want, just send us an email at webinars@hfm.com. To be honest, I need to confess that I had some questions, but unfortunately, I didn't saw them on time. So don't worry if this happens, because I will reply. I replied to some people yesterday. I have a few more that I'm gonna reply today. So if I'm a bit delayed, my apologies for that. It's been extremely busy. You know how volatile the markets are lately. So I'm really sorry if I haven't replied to some of you. Okay, I will today as soon as possible. Okay, thank you very much. Have a great day ahead. Take care, and see you again on our live streaming tomorrow, probably during the US session. Thank you. Have a great day ahead. Take care. Bye bye.